welcome to another video about inclusive investor engagement. So just like the other two videos that I have uploaded, we are discussing the requisition general meetings at 7 UK investment trusts, which have been called by an activist American hedge fund called Saba Capital Management. So in those last two videos, I show you the correspondences that I have received from the UK companies. And basically, I break down my thoughts as both an individual investor and also a former proxy solicitation and corporate governance consultant. So myself, I own at least one share in about 1,400 UK listed companies with the intention of attending as many AGMs as possible in my lifetime. So if you haven't seen those two videos, I will leave the links to those in the caption, and I hope you will take a look at them. So in this video, what we will be discussing is the results of the Herald Investment Trust General Meeting, which took place on Wednesday, 22nd of January.
Right, so I've got my glasses and my overalls on, so we're ready to jump straight into it. Okay, so I had promised that we would look at the outcome of the Herald Investment Trust AGM that took place on the 22nd of January. But actually, before we do that, it would be important to inform ourselves on what happened at the 2024 AGM. So in my work as a proxy solicitation and corporate governance consultant, it was always important for me to first have a solid footing of what took place at the company's previous AGMs to give me insight on voting participation, who voted, the levels of voting, for or against, the level of dissension, etc. So what I have done here is prepared a very basic Excel of key information regarding the 2024 AGM, and then this will allow us to compare against the outcome of the 22nd January general meeting. So basic information in regards to the AGM. The event took place on the 23rd of April. So we would expect that year on year, their Herald's AGM would take place around the same time, so end of April. So this actually coincides with the start of proxy season. So proxy season generally is between the end of April through to the end of July or middle of July. So it goes absolutely crazy in May with many AGMs happening at the same time. If you think about it, it just makes a lot of sense, right? That companies would have their AGM around May time because their year end would be the 31st of December. And then under UK Companies Act 2006, companies have up to 6 months to file their annual reports and accounts. And so therefore they decide to have their AGMs around May. So basically, in addition to the date, I just indicated here the issued share capital at the time of the AGM, which was 54,551,642 shares. And then in terms of voting turnout, of that 54.55 million that have voting rights, 21,053,328 shares were voted by various different shareholders. So institutions, directly registered retail shareholders holding through nominees, and other types of shareholders, although generally it's institutional investors who dominate voting in most of the companies. And then, as we already know, retail tend to be unengaged, but we'll cover that further as we go through this information. So the 21,053,328 shares represent 38.59% of the issued share capital. So this is actually quite low for a company of this size. So voting turnout equated to 38.59% of the issued share capital, which for a main market company their voting turnout is actually quite low. So for a company of this size, so market capitalization of 1.172 billion, you would expect that around 70% of the issued share capital would vote. So there's lots of research in terms of median for voting turnout, etc. We can always take a look at that in subsequent videos, but for the interest of this video, we're just looking at some general data. So voting turnout is quite low, but is not as low as other companies that we have seen. So this might be typical of investment trusts, which is held largely by retail shareholders and increasingly those that hold through platforms. So all the resolutions passed with 99% majority, so as verified here by the RNS announcement. Okay, so all of the resolutions passed with no issues. And then now I have to make assumptions on who would have voted. So this is really critical when one is projecting vote outcome for the next shareholder meetings, for example. So ordinarily, I would expect that the company secretary and the IR would do this kind of work. And then, of course, the registrar and the proxy solicitation consultant and the corporate brokers can all jump in on this. But a lot of the times, this kind of information is just simply not valued, and sometimes even ignored because it's just an AGM. That's how companies think about it. But as we know, it's not just an AGM anymore when you have an activist investor. So basically, I'm making some assumptions here on who would be likeliest to vote to least likeliest to vote. So from experience, we assume that it's largely institutional investors that comprise this 38.5%, 38.59%. Why institutions? Well, they have a fiduciary duty to vote on behalf of their clients. They are organized, so then they are signed up to proxy voting platforms. For example, those run by the biggest proxy voting agent called Broadridge. Proximity, which is a new technology that is excellent for transmitting votes, is also in the mix now. And then you have the likes of the proxy advisors also processing votes like ISS, but ISS ends up using Broadridge as a final step, at least from my experience. So anyway, as we're discussing here, institutional investors already have a process for proxy voting, or most of them already have a process for proxy voting. And many of them will use a proxy advisor to help them make voting decisions. So these proxy advisors, the biggest one is ISS, Institutional Shareholder Solutions. I would say nearly every large institutional investor will use them. Then the second largest, is Glass Lewis. So often these institutional investors will need a secondary provider to bounce off the analysis of the first provider. And so then they have a means of comparison, and often it's Glass Lewis. And then sometimes they will take a third proxy advisor, or in the UK, they will use IVIS, which is Institutional Voting Information Service, which is run by the Investment Association. So historically, a lot of the insurance companies would use Investment Association. And then lots of the local authorities sign up to PERC. So then basically you've got these 4 different players. But again, we are just looking at basic information here. We'll break down these proxy advisors in subsequent videos. But I'm just making assumptions based on the voting outcome. So my expectation is that it would be largely institutional investors first. And then I substantiate that thinking by looking at public filings. Okay, so here at T, we're doing things in a very bootstrapped way, right? So I don't have access to Bloomberg and FactSet and all of those fangled things, even though Bloomberg is just across the street from us. But essentially, there's already so much free data out there to understand a company's shareholder composition, even at just a very basic level, and the information might be, out of date. But for now, this is fine. But ordinarily, if I was advising a client, I would ask to receive the latest register analysis. Or if I was advising an activist investor, I would help them through the process of requesting the register of members, the Section 793 disclosures, And if the activist investor actually holds more than 10% of the issued share capital, then even write to the company requesting to uphold the right for that activist investor to actually tell the company which nominees they want sent more detailed 793 disclosure requests to. So basically, right now, what we're looking at is public filings from Market Screener. So what I did was look at that information. So here on Market Screener, again, even on Market Screener, it's just very basic information. So from what has been made visible to me, I made assumptions on who would most likely comprise that 38.59% voted. So then my conclusion, and again, this is just based on assumptions, it's unconfirmed because I don't have the actual voting list from the AGM. I would assume that Rathbone Investment Management voted their 9.62%. Now, my experience with Rathbone is they're very good in terms of, having solid investment managers. They actually even have good ESG policies back in the day. But the difficulty with Rathbones is the position is often held by many different investment managers, and then basically having to track down those investment managers and then convincing them to vote, which then takes their time. And then often what I saw was then they missed the proxy voting deadline and just not vote at all. But in this situation, we assume that Rathbones is much more organized and take their voting rights seriously, and that they voted their 9.62. So that goes towards that 30.54%. And then JM Fin, essentially Rathbones. I mean, these kinds of investment houses, it's not like BlackRock, Vanguard, investors, legal in general, where that all of those would generally vote, and they have big governance and proxy voting team. With JM Fin, again, it's kind of up in the air in terms of whether they voted, but we're assuming that the investment managers did. And then this Allspring Global Investments, again, we're assuming that they have voting policies and that they would have voted their 5.67. And Lazard, the asset management element, will have voted as well. So that's 5%. And then West Yorkshire Pension Fund, which is a local authority pension fund, we know that they use PERC, so they would have voted their 2.46. And possible that PERC would have recommended against some of the resolutions, but I'm not sure. Perhaps not, if all of the resolutions passed with 99.9%. In favor. And then Close Asset Management, which I know from experience have a voting policy, and they do vote. So basically, I'm making an assumption that these investors here representing 30.54% would have voted. So they would have been the big chunk of the 38.59%. Now, looking at this list, right, it's not complete. So then I'm making assumptions that some other institutional investors that I couldn't see will have voted a further 2%, which then leaves me to assume that, okay, about 3% may have been voted by the directors, the employees that have vested positions and have voting rights, and other insiders. So 3% generally is what we would see. And then assuming that there are retail shareholders that do participate on an ongoing basis at AGMs, the norm is about 3% of the issued share capital voting. So at least this is what I have seen in other companies I have worked with. So basically, you've got this assumption here, so 30.54. 2.06, 3% for directors and insiders, another 3% for retail, and then basically that brings you to 38.59. Okay, so going into this general meeting, the company and their advisors would have probably been like, oh my God, 38%, and Saba owns 27.8%. So they probably would have been a little bit, oh shit, Oops, I'm not allowed to say that, am I? But yeah, so they would have been, oh crap, this is not good. So some thoughts that may be going through people's heads, gosh, why do we not have more institutional investors instead of this long tail of pesky retail shareholders? Who are our retail shareholders? Let's take a look at the registrar, and then they see, okay, there's only a few hundred names of individuals here, but gosh, Hargreaves Lansdowne, AJ Bell, Interactive Investor, they have lots of percentages. So anyway, basically starts the work of then identifying and basically soliciting these individual investors and any other investors who might be inclined to vote. Okay, so why don't we take a look at the advisors that we mentioned? So basically, when there's a general meeting that has been requisitioned by a shareholder, essentially the defense team needs to be assembled. So based on the information online, so advisor rankings, these guys are great in terms of tracking the advisors for various companies listed in the London Stock Exchange and Aquis. We can see who the different advisors are. So I did do some estimations of cost, which I will go through later when we talk about return on investment. So basically, you've got the legal advisors here, Dixon Minto, McFarland, so very experienced law firms here. Financial advisor, ooh, JP Morgan Casanove, very blue-blooded. And then you've got the Peel Hunt team, the Singer Capital team, and Camarco. So very, very proficient activist defense and activist target financial PR firm. And then you've got Link, who have been acquired by Japanese MUFG. And then based on the letter I received from the company, their proxy solicitation consultant is DF King. And then I made some assumptions around mailings here as well. So anyway, we'll come back to this, but basically now we have an idea of who the different advisors are. So we are going into preparation for the general meeting, or at least the mindset that the company and their advisors would take in preparing for the general meeting, the requisition general meeting. So basic information here. The meeting is actually not February, 22nd of January. So 22nd of January. And then the issued share capital as of the 22nd of January, and I verified this on the company's RNS announcements. Basically, okay, of course it is being slow, but the issued share capital as of the general meeting was 50,340,861 shares. The voting turnout significantly higher at 40,571,100 shares, or 80.59% of the issued share capital. So that is a huge jump from the 38.59% of the issued share capital that voted at the AGM. But then we have to bear in mind that that 80.59% also includes Saba's huge holding, which we are estimating to be about 27.8%, could be higher, up to 29.9%. This is based on one of their latest RNS announcements. So basically, you've got the voting turnout here, 80.59%. And then the result, all the resolutions were defeated with a 65.1% majority. So this is where it gets kind of amusing, because you will see how each side bends the story, so to speak. So let's take a look at the RNS announcement. Just looking at these numbers here and looking at the letters I received, the company made huge efforts to identify and to engage retail shareholders into voting. In terms of what Saba did, to be honest, I don't think they did much proxy solicitation. I don't think they did much engaging, which is quite lucky for the company, to be honest with you. I think essentially their position here was to buy as many shares as they can get their hands on and then see how it goes. Basically, now what has happened is the company is stuck with this 27.8% shareholder and a low voting turnout if they don't go through all the effort they went through with the general meeting proxy solicitation. So let's just take a look at the actual RNS announcement in relation to this requisition general meeting. So this came out, yes, about 3 hours after the start of the general meeting. It took place at 12 noon. The company will have already known the outcome of the vote because the largest positions would have been voted before general meeting, so 48 hours before the general meeting, which would be the proxy voting deadline. And then any additional votes like my one share on the day will have been added after the general meeting and then basically assembled and verified by the registrar and then the independent assessors. So basically here, the Board of Herald Investment Trust is pleased to announce that requisition resolutions 1 to 8 put forward at the general meeting of the company held earlier today were defeated on a poll. 65.1% of the total votes cast were against the requisition resolutions. So this is assuming that Saba's position is within that 65.1. This is assuming that Saba's holding is included within these numbers. The votes against totaled more than 26.4 million and represented a majority of the company's voting rights. So, and here we go, we get a bit spicy. So, excluding the votes Saba cast in favor of their own requisition resolutions, being 14.1 million votes, representing 34.75% of the votes cast, only a further 59,221 shares representing just 0.15% of the votes cast voted in favor of the requisition resolutions. This is a damning, oh my gosh, spicy words here. Wow, interesting. This definitely would have come from the PR, but I think it would have come from the PR, but approved by the company. Interesting. Indictment of Saba's proposals by the company's non-Saba shareholders. Okay, so basically just making very clear to shareholders that Saba got very little support, which again spells to me that they did not do much proxy solicitation. They certainly will not have had access to the data that the company has. Although under the UK Companies Act 2006, they certainly could have requested the Register of Members 793 disclosures, which lists the beneficial holders behind the nominees. They're advised by one of the best activist investor law firms, White & Case, and by the legendary Patrick Sarch. They would have known about these things. I also know that Saba has their own proxy solicitation consultant in Alliance Advisors. So this is a solid team of proxy solicitation. You've got people like Tom Keyes. You've got Tim Marshall, who I believe is leading the case here for Saba. So there's some good capabilities here. Oh, Glenn Keeling as well. You've got, so they've got resources available to them, but I don't know why they didn't step on the gas. So I guess lucky for Herald. Okay, so let's continue on with assumptions for the requisitioned general meeting. So 65.1% against the resolutions. And then what's the breakdown here? Who would have voted? So obviously the registrar will have the detailed list of those who voted. And you would assume that the proxy solicitation consultant would have done a vote reconciliation to tell the company which institutional investors voted, via which nominee, which private client brokers voted, et cetera, et cetera. So my assumptions are, okay, you've got Saba Capital Management would have voted their position, presumably in favor of all the resolutions, right? Then what would have made up the rest of the votes? So let's just look at what happened at the AGM. So we will make some assumptions here that the institutional investors who voted at the AGM also voted at the general meeting. You've got the 30.54 plus other institutional investors, so 32.59% of the issued share capital. And then we're assuming again that the directors, employees, and other insiders would have voted their 3%, that the loyal retail who voted at the AGM also voted their 3%. So my assumption is that a further 14.2% was collected from retail shareholders who hadn't previously voted. So basically, as I had shown before, retail shareholders were written to by the company, so telling me about the situation and basically urging us to exercise our votes via our nominees. So essentially, that would have been a lot of letters because there would have been many individual investors behind these nominees. But essentially, the campaign led to a further 14.2% of the issued share capital voting. Again, these are just assumptions based on my basic analysis here, right? Additional 14.2% of the issued share capital voted at the general meeting. Is this worth it? So is all the work that the company did and the costs they incurred worth it? Well, only the company can answer that, and the shareholders too. So the curious cat, I made some assumptions here on how much this would have costed the company. So I did ask about this at the shareholder meeting, and the company has promised that they will make this information public. So I will take a look at this information once it is out. But I'm just making some assumptions here again based on experience, and just looking at the kind of work involved in the campaign like this. So these are just estimations, okay? So in terms of first cost, you always need legal advisors. You've got some very proficient lawyers here. The assumption would be that around 250 hours between the time the company received the requisition and the actual general meeting, that the lawyers would have spent about 250 hours. I just assumed that the average cost per hour of quality law firms like these guys, so for the partner, director, senior associates, etc., that it would work out to be £2,000 per hour. So then that brings you to an estimated total cost of 500,000. So this could be completely wrong. This could be too high, or this could be too low. But essentially, I think it would have been around 500,000. And then look, you have a very blue-blooded financial advisor here, great team, to be honest, well, at least based on my experience. And probably not very cheap, but you get good advice, you get what you pay for. So I would assume that these guys would have worked on a success fee basis and that they already have a retainer. So my assumption is that a firm like JP Morgan Cazenove would have a success fee of $500,000. Now the bankers there could be insulted by this number. I think that 500K is probably what they would have received. Could be higher, could be lower. I could be more precise. Again, I'm just estimating here. And then the corporate brokers. So you've got some proficient brokers here who would have been involved in the crafting of the defense materials and also engaging the institutional investors and the private client brokers too. So the assumption is that these guys would have also taken in some success fees. And then the estimation I made is another 500,000 split between the two. So I hope these guys think that I haven't undersold them. Anyway, but again, this is just my assumption. I'm just rounding things off. And then you've got the financial PR. Again, these guys are very experienced in activist cases. So I actually used to do a lot of work with Camarcos. In fact, I often would bring them on um, to activist cases I worked on. So these guys are very experienced, and Billy Clegg is the man. So what do I think they charged? They are the company's retained national PR. I think they would have asked for 100,000. Okay. And then the registrars, obviously these guys had to do extra work. They're on a multi-year retainer with the company, but they were extremely professional. They had to bring in more people, more of their staff to actually accommodate the number of shareholders that it turned out. Very well run, to be honest. And I would assume that they will have charged the company for the additional costs. And so my estimation is another 100,000. And then the proxy solicitation consultant. Now, it varies from proxy solicitation consultant to then, from it varies how involved the proxy solicitation consultant is. In some cases, they're very hands-on and very advisory, and in some cases, they're quite administrative. So they would just be calling the back offices, making retail shareholder calls. To be honest with you, in this day and age, like I don't even have a landline at home. I think I do, but I don't actually have a phone connected. And then when I get phone calls on my phones, like I generally don't answer my phone because if I don't recognize the number or if I'm in the middle of something, I don't answer my phone. So I don't really think telephone solicitation is that effective anymore. Sorry. But anyway, so proxy consultant could be very advisory or it could be administrative. Depends on the company. So in this case, let's assume the middle, right? I would assume that they commanded about 75,000, and that does not include mailing costs. So at least in my time, as a proxy solicitation consultant, my team and I would have been involved in the mailing, and there would have been unitary costs charged by the actual printers themselves. I think Sterling was the biggest and is the major printer. I have to verify this, and they probably still are. But there's also other printers out there. But my assumption is that this is just at cost for printing essentially two a full out here. So it's like about 2 pages double-sided in color, and then first class post plus the envelope. I mean, this seems quite conservative now that I think about it. So I would assume that it's about £6 to print, pack, stamp, and mail this. I only received one mailing, so basically £6. But then assuming the number of retail is quite voluminous behind the nominees, I'm making an assumption that they've mailed to 25,000 individuals. I am estimating this number here because I hold one share, right? I hold at least one share in like 1,400 UK listed companies. For me as a tiny shareholder to have received a letter like this that cost £6 at least or thereabouts, you would have assumed that the company was pretty much mailing to everyone. So 25,000 doesn't seem that crazy. So basically we were looking at a total of 150,000 just for the mailing. Oh my goodness. So then you're looking at a total campaign cost here of £1.425 million. So basically, um, that is what I estimate the company would have paid for the services of these various professional advisors to then generate an additional 14.2% in new votes. So, is it worth it? As I said before, only the company and the shareholders can answer that. Now, where does this leave the company and what lessons can we take? So, look, the AGM is coming up um, at the end of April, right? Or I'm not sure. I'm just assuming that the company will hold their AGM again around the 23rd of April, just like last year. They have this 27.8% shareholder who might now be 29.9%. And then basically, you've got this major shareholder who could essentially block any special resolution, right? And then they're actually not that far off anymore from even blocking ordinary resolutions if the company doesn't go through the process again of what they went through for the general meeting for their AGM. So essentially repeating these costs, or at least some of these costs. So there's a lot to think about here because essentially Herald now has a wolf among the sheep. So just looking at the press around, looking at the press around Herald and Saba, I mean, the UK press is obviously very pro Herald, right? And painting Saba as big bad boys, big bad wolves. UK capital markets have been praying for institutional investors to come back to the market. They've gotten a deep-pocketed institutional investor. So, wish granted. Only thing is, it is an activist investor. So, what do you do? Basically, company now has to think about their ongoing engagement and AGM strategy. Is it a good spend of shareholders' money to incur these costs on an ongoing basis? For me, no. What would be brilliant is if retail shareholders can get to a position of participating without all these mailings and without all these additional costs. But basically that will take effort and that will take time. And essentially, it's really important at this juncture to look at your activist investor, to look at the activist investor not necessarily always as the enemy, because you do have successful individuals with deep pockets coming into your company register. There's potential for further engagement and even collaboration, constructive and compliant collaboration. What did struck me when I was listening to questions and when I was asking my questions too at the general meeting is how little the company seemed to know about Saba, which is really interesting. You would have expected more engagement between the company and their major investor. So it would be really important for the company and Saba to engage further and maybe accept help from one another. It might be that Saba has some really interesting ideas that the company, um, the board, the asset manager might be able to take on board. Basically, Herald now has no choice but actually to embrace progress. So, in terms of how do you engage retail shareholders in a way that is not so paper based. So then you think about, okay, how have the American bros, even how did Donald Trump, um, Elon Musk, amass the fans that they have? So if you think of your retail shareholders not just as shareholders, but look at them also as, yeah, your friends, your fans. Um, Basically, it will guide you on how to engage in a fresh way with them. So, what I mean about that is basically the company needs to look at alternative ways of engagement beyond just paper, um, beyond um, traditional media. So, what is out there? There are hundreds, if not thousands, of highly influential, responsible influencers on YouTube, on TikTok, on X, and basically what we have seen, for example, at the likes of Tesla, they the retail shareholder base represents 45% of the issued share capital. Massive. 45% of the issued share capital. That is the equivalent to all of AstraZeneca. Look at Tesla as an example. You have 45% of the issued share capital that is owned by retail shareholders. And a lot of those retail shareholders would actually die in a ditch for Elon Musk, because Elon, as I call him, engages directly with them uh, on platforms like X, on podcasts like Joe Rogan, and even on crypto channels. So I'm not saying for companies to become Elon Musk, oh my God, hell no, um, or to turn like Donald Trump. But the thinking here is step outside your usual box. Of course, companies need to comply with their fiduciary duty. They need to comply with regulation and best practice. But there certainly is a lot more ways now for companies to reach their retail audience, so their existing base, and possibly even amass a new base of retail investors who could be the next generation. So from Gen Z or millennial, um, rather than just presumably the boomer and the Gen X that comprise the company's shareholder base. So here at T, we do remind our community to just think outside of the box, think progressively, think friends and fans, think loyalty. And then, as regards the activist strategy that has been employed, look, some of the cases I worked for as a proxy solicitation consultant was for very aggressive activist hedge funds, including Elliott. Um, and one of the things that um, we, I, as a proxy solicitation consultant, advocated back in the day is this gently approach here in the UK. So the American standard for activism is remove all the directors and replace with new ones nominated by the activist investor. The more gentlemanly British don't like that. So what I had found when I was a proxy solicitation consultant was that this gently was more effective. So essentially what that does is a few things. Number one, you don't remove the entire board. You don't requisition to remove the entire board. Maybe you look at removing one or none, but then adding 2 or 3 additional directors. And then that comes across as much more balanced, much more conciliatory. And then also when it involves the proxy solicitation consultants, they don't look at the situation as what has been portrayed in the media. They don't look at it as a takeover type situation, because in a situation like that, the activist investor would then be required to present like a detailed case of why their strategy and why their nominees would actually be better than the incumbents. So then in this gently way, you end up with a situation where you might actually even be able to convince the proxy advisor to recommend your resolutions or even the resolutions. And it also potentially comes across in a less aggressive way, more conciliatory, and then you don't have to deal with this whole like narrative about, oh, Americans taking over, not wanting to pay the premium, blah blah. So I was quite surprised that activist hedge funds have moved so far away from this gently that was done like 10 years ago, and that worked quite well on a number of cases. And then for all of those involved, look, we haven't looked in great detail. We haven't looked in great detail at the directors who were proposed to be removed, but activist situations are so emotionally draining. And essentially, a positive way of looking at this is, hey, director, you have new experience. You have made it out alive. And even if you were voted down, even if you were voted off, actually, again, you still have your new experience. And if you believe that actually you did do everything you could do, and you fulfilled all of your duties, well, then actually that's good enough. And that's another tick on your box of experience. So an activist situation is again such a unique experience, and for any director to have gone through this, you now have experience to share with other company directors and other companies that you work with. So basically, that's it for now. We will continue to do more of these videos. This is meant to just be informal, not financial advice, not very polished, obviously. But hopefully this has been helpful. If it has been helpful, please do subscribe, like, and share, and comment your thoughts. Thank you very much.